Friday, June 12th, 07:22 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Do a pre-market update on the broad markets, on the current situation. Today, supposed to launch the stock IPO of SpaceX. That'll be listed on the NASDAQ Stock Exchange. For the past days, weeks, and months, massive amount of campaign money has been in to market that. Remember, the exchanges are for profit. They have incentive to market, spend a lot of money, because they sell advertisement as well too, to brokers. But also they make money off exchange fees. More people are situation aware the past few days, weeks, and months about the stock IPOs. But here we know the bigger picture of the scheduled event next Wednesday at 2 p.m. FOMC, Federal Reserve, scheduled to vote. And right now it's very likely they will leave unchanged the overnight interest rates. There's more than just the stock market to trade and invest in. Thank goodness we're situation aware. Looking here, 3 time frames. The far right, the weekly, the middle, the daily, and the left, the intraday. So first we're going to look here at the yields, U.S. Treasury yields, the 2-year one. So for the week, you can see it's curling down a little bit, same with the daily and the intraday. Again, yields represent the interest rates, but this is the short-term one. Short-term one has a bigger impact on currencies. And also when the Federal Reserve makes policies or statements, the short-term yield reflects it much more. Same with the short-term notes. So let's look at this next. Actually, let's go to the 10-year too. So this is the long-term yield, the 10-year one. For the week, made a higher high, back inside that range of the prior week. Daily chart, since overnight we broke the low of yesterday, just shy of taking this swing low here. Again, small trading range, forming a dodgy candle here. Dodgy candle means several things. It means indecision, potential halfway, and potential reversal. And on the far left, the daily chart. After that huge sell-off yesterday, we broke some key levels down here. Again, currently inside candle, just shy of that swing low. The regular trading hour is not even open. These things can reverse. So that's the yields. Now let's go look at the notes. Again, the notes, bonds trade inverse from the yields. So when the bonds and notes go lower, yields go higher, interest rates go higher. Okay, we're looking here at the 2-year note, which again, when the Federal Reserve makes policies, statements, this reflects it very well. Well, for the week, we made a new low for the year, and now we're back inside the range of the prior week. Still lower highs, lower lows. The trend is still down for these. So as they're still trending down, that represents interest rates, yields going higher. Again, this is the short-term 2-year. Now here on the daily, okay, we broke the high of yesterday. Yesterday did a massive retracement. Look at that big green candle of that big bearish candle that happened prior days. We did not take it out. Nope. This is a massive consolidation here. Major retest. Take it to the intraday on the far left. Yesterday, we broke past over this big red candle midpoint and came here. This was a key level. This is important here, this midpoint right here. But this kind of candle action up here was even more important. That's why I labeled it. I was expecting we might do a retest here, blow through, which did, but this is the massive rejection. See these big wicks up here? Opportunities to be looking for a bearish trade here. Again, if this turns down and goes lower, expect more pressure on the US dollar to go higher. Opportunities to trade on multiple different financial assets. So that's the short term. Let's go to the next. The long term. So the 10-year note, the longer term one, which has a big impact on the stock market, as well as the currency. But again, the shorter term one has more of an impact on currency. Or again, this longer one, when people say long term treasuries, they're referring to the 10-year, 15, 20, 30, the longer term ones. Well, look here on the weekly, far right, lower high, lower low. Trend is still down. Massive retracement of the prior week, but it didn't take out the high. Still leaning bearish bias. Middle chart, the daily, again, popped above the high yesterday, forming that big wick on the top. Sellers up here. Makes sense. Look, massive consolidation up here. Big wicks up here. History repeating itself again. And the far left, intraday chart. Yep. See that went up even stronger than the short term. Again, this is the 10-year. So you have a divergence. You had the longer term 10-year went higher than the shorter term one. Let's go to the next financial instrument. Look at the currency now. US dollar index. I'm in bullish position still. Swing trade. Weekly chart, higher high, higher low. We tested midpoint as expected, and we went up here as expected. So again, we can have a consolidation here, building energy, continue going higher. But no surprise, this supply zone up here having a rejection. Already expected that. Pull back, looking for opportunities to reload if I'm still bullish, which I am. And I did reload during the week. So here, now, the middle chart, the daily. We tested the swing high here. Yesterday, rejected it. Huge sell-off, inside candle right here. Today, currently forming inside candle. So as expected, that's why I labeled that key level up there. Look at that big, huge trading range right there, big wick. And all we are is inside candle right now. Again, leaning more bullish bias. Yeah, we can still have a test down here. More opportunities to be buying on the dip. The far left, intraday, which was yesterday, was interesting. Again, look at this. Went up in here, supply zone, rejected it. These key levels. Midpoint, never even retested it. Broke that swing low right here. Now, buyers stepping in again. Again, we're still below midpoint here. Big wicks in the bottom. So it's a battle going on here right now. On to the next. Look at the euro, which expect the total inverse. Yep, look at the weekly chart. Deep retracement up here in midpoint, but still trend down, lower highs, lower lows. And I shared yesterday, Japanese yen, all-time new low for the year against the dollar. Overnight, the euro gapped up. Label this. There we go. And look at this on the intraday chart right here. It's in a supply zone where sellers are already seeing rejection up here. Go to the stock indexes. First, look at the S&P 500 futures. Yep, still trending down, lower highs, lower lows. Big wick on the bottom. Broke this imbalance area. No surprise, buyers stepping in here. Speculating it's going to go higher. So they're buying there. Well, speculators are also on the other side, the bearish side. Daily chart. Yep, big key level down here. And look, I think we're doing the A to B. And now we're in the B to C. Looking for a C to D. Come down here somewhere. Opportunities, looking for that bearish opportunity for profiting. So today's overnight candle, since overnight right here, already took out the hive yesterday. And this was some prior rejection. Look at those big wicks. So maybe today they're pumping up into the morning session and have a rollover maybe in the afternoon. What does that mean? Well, consider going back in the afternoon or set alerts. Intraday right here. Yesterday, we broke that swing high. Now trading higher, pre-market. Haven't even tested down here yet. Look at that green candle. Nice bullish pin bar here and extended higher. Again, easy for them to pump it up pre-market when there's less volume. Let's go look at the NASDAQ 100. Yep, similar to the S&P 500 here on the weekly. Daily chart already broke the high of yesterday. And intraday, 4 hour. Yep, same thing. Look at that red bullish pin bar popping up. There is economic news today. I think it's at 10 a.m., 10:30. So again, this could be pushed up into the economic news and then the dump after that news. Go commodities. So crude oil last night filled a gap on the intraday 4 hour chart. Look at the weekly chart. Lower high, lower low. Huge red candle in a in a demand zone where buyers are. Middle chart daily. Yep. Overnight, lower high, lower low. We're in a demand zone. And intraday, far left. Overnight, huge red candle move down. Currently inside candle. I see no bullish setup yet. I am bullish, looking for opportunities to reload bullish. I don't see them occurring yet. I don't want to be in a fake out if we go lower. Patience. Patience. Natural gas. Still in bullish positions. I have gains. Weekly chart. Lower low, lower high. Looking to reload when it comes down to my key levels. Daily chart. We are now in a demand zone. Demand zone that was made by imbalance area. And the 4 hour intraday. Lower low, lower high. The momentum's still down. Metals. Gold. Yep. Weekly chart. Again, another huge trading range. Broke below here, which we were waiting for this. This is a key level. Finally got down here. We broke below it. Lower high, lower low. Still trading below the prior week. Made a new low for the year. Yep. So you have the gold and Japanese yen, new low for the year. Big wick forming there. Some buyers stepping in. Daily chart. Already broke the high of yesterday. Higher high, higher low. Candle's not done yet. And we're filling that imbalance area right here. Again, the momentum is still down. I understand some of these people are scalping, some are day trading overnight. Doesn't mean the trend is going up. But again, key levels I have marked. And intraday right here. We did not test the midpoint here, but we had a nice strong green candle right here. Big wicks in the bottom, buyers defending it, bearish pin bar up there. Yep, so I'll be sitting on my hands waiting for a key level to be tested. Again, it could be easily for a lot of fake outs between now and the Federal Reserve meeting. Plus, it's the end of the week, Friday. Naturally, a lot of people are hedging. Institutions, people that manage other people's money, or people that know how to do it individually. And some people doing the speculating, buying metals on the weekend, or buying oil on the week, commodities. So silver, bullish pin bar down here. It did not make a new low for the year this week, where gold was more bearish. Got it? That's why I was trading bullish silver past weeks. It was stronger than gold. So you can have silver take off first before gold. Daily chart. Yep, yesterday formed that nice bullish engulfing candle. I filmed it right here, and we're retesting it. Again, this might be the sweet one I might be putting a trade on today. Intraday, big green candle, midpoint, test right there in that early 4 hour candle. Wow, these look like distribution. This looks like fake out. Let me extend this out a little bit more. There we go. Yep, so maybe we'll come down here, do a retest somewhere deeper, then I'll consider doing a bullish trade. Not net. Crypto Bitcoin. Yep, last week was the new low for the year. This week, inside candle. Daily chart. big consolidation, intraday overnight, running back up into prior supply zone of sellers. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.